Hey guys, and welcome back to Smart Money Minds. So Tesla has been on a tear for the last 4 weeks. It's gone up, let's see here, over 50% in the last 4 weeks here with increasing bull volume. We had positive earnings reaction, and it's just been ripping and pushed right over the all-time highs of $900 previously. And now it's at just above $1,200 here, and we're looking at even higher possibly, and this is just the beginning of the electric car hype. Now in this video, I'm going to do a deep dive technical analysis on a bunch of EV companies, especially in the United States and also in China, where that industry is going exponentially. Now we have to look at Tesla, which is the leader, and we're looking at a bunch of other ones, including Lucid, including NIO, and also a couple of battery companies for lithium, because they're going to be supporting that. That's a supporting industry for the EV revolution, essentially. Now, why do we talk about EV, electric cars? Because it is really, honestly, taking over sooner than you think. Because if you take a look at this, what they're saying here is they're forecasting by 2025, in about 4 years, about 20% of all new cars will be electric, and that's global. This is basically the next internet hype, where we went from no internet to everyone having internet. And this is what's going to happen as well, is from everybody having a gas-powered car to moving towards a electric vehicle for everyone in the world as much as possible. Things are getting cheaper to produce, and that's why we have to look at these EV companies. We're looking at exponential growth for a lot of these startups, and also for these charging companies that are going to support these cars as well. I'm going to be looking at the technicals and the indicators and the patterns that are on some of these charts, what I am very interested in, and also what price point I would be willing to get in on some of these tickers. Also, I'm going to be going over some predictions of where I think the price point will go and where I believe some consolidation may be happening soon on some of these big names. Now, the first one I'm going to talk about is the big dog, which is Tesla. Now, Tesla has been pushing up. Over here, we had positive earnings reaction, so we've been pushing up. And now the next resistance here is 1,300. So we're pushing up. The one concern I have here is that the Bollinger Band, the third deviation, this is detached on the weekly chart from the second deviation. So we could be looking at a potential volume climax play up here. So let's say we break through 1300 and we go straight to 1500. Potential volume climax move here. We're going to get some big major volume, and then we're going to get a higher low. The market has been quite strong. The S&P 500, the NASDAQ have been supporting a move like this, but we have to wait that its potential going to draw back as well. So that's why I'm seeing that if we get way too extend here on Tesla, we could have a similar move like this, where we get up to a certain range, we start to flatten out, and we start seeing a little bit of consolidation, and that's a possibility as well. Now the next one is Lucid, and this actually played out exactly as I anticipated for this move. They were actually going to produce cars, and check this equilibrium breakdown here. I was expecting it to actually break down, get to this point around here to the bottom of the support zone, which I have highlighted in yellow, have no follow through, and push back up. So I actually made a play last week at 34, and I definitely sold too soon, because now it's at 42 and reaching a new high on this move. With this move here, this bull flag, look at the volume and decreasing, and now we got some increasing bull volume and pushing right up. I'm looking at the next resistance at around the 49.50 range, which is right about here where we started having some support, push back down here. So we could get up to this zone and potentially hit up here before we start the next level of consolidation. So looking something like this, push, and maybe a bit of a fade at the $50 zone here. Before we move on to the Chinese companies, I am interested in Plug here. Now Plug is actually giving us a very nice bull flag move. So it did break the 8 EMA, which is the daily 8 EMA, which is this blue line here. But we're still at a very, very respectable Fibonacci level, which is at the 0.382. Look at the bear volume, which is quite low. We got earnings coming up, so I'm anticipating a bit of a run, perhaps the bull flag to confirm here, or at least to touch the top around the 43 zone to test that range again. But let's take a look here on the longer time frame. We had a big move, we had come down, and right around here, the $18 to $23 range, that's the support zone. So we wanted to see it hold on the long term, and that's what it's been doing right now before we had this big move with volume. So I'm anticipating higher prices, and as I said, even on the longer time frame, from the high to the low, we're only back to the 0.382, which I think we can actually get back up to the golden pocket around the 53 zone, right around here. So potential to get back up right there. Now moving on here, we're going to look at a bunch of Chinese EV companies which are growing exponentially. Now NIO is one of the biggest ones, but you see here that it is respecting this line right here, this zone right here around the $40 to $43 zone, which has been acting as resistance. It's struggling right over here, and on the longer time frame, we potentially have this triangle form, which we have good support at around the 30 to 33 zone. So that's a really good zone to stop out at, and I'm really waiting at least for earnings to happen and see where the reaction is gonna be before I want to get into something like this. The best case potential is to have volume to break out of this zone. Then we're gonna look at the $55 zone right here, as a potential right here, as a potential next resistance zone, because as you see here, we actually have a very, very good zone right around here as a resistance. XPEV here is another car company. $51 zone is a zone of resistance, as you see here. And that's pretty much where it ended up, around 49.50 here, where it had a bunch of resistance. But check out what's happening here. We have a pennant forming. The volume is starting to decrease, and even if the bear volume is coming up a little bit here, the prices are not reflecting so. It is still tightening up into this range. So there's a very good stop level here at 45, right around here, the 44 to 45 zone, that you can use as a stop, because if it breaks below it, the play is over and you look for another entry. But we have a very good potential that this breaks bullish, and this pennant breaks bullish, and if we get volume, we get right over this zone over here of the $55 zone, and now we lack resistance up until the $60 range. Lee was something I was playing last week, and I was playing this potential bull flag here, right over here, with low bear volume, but it did break down, so I had to get stopped out from this zone. Now we're looking back down here at around the $29, $30 zone as the level of support, but it is giving you a nice decent uptrend right over this trend line that we have drawn here, and the next level of resistance is around the 37 zone right over here. So I'm liking it for a potential for the move to come back down. We have a Fibonacci move, let's say we get from here, and if we get a Fibonacci move around the $30, which is the level of support, that's where we start bouncing and we can get a move back up to the zone. Let's see here, LAC, which is Lithium Americas, because lithium batteries is going to be the potential, or it is being used in all these car companies. You see here, LAC is at an all-time high. And the volume comparably in the last year, since September, has been increasing. So there is a lot of interest in this stock right here. With an all-time high move, it's not terribly extended even on the weekly time frame. It could potentially just continue to glide up this 8 EMA here on the daily time frame, and until we lose that, there's no reason to sell at this point. We do have earnings coming up on November 16th, so let's see where this takes us, because we do have a lot of earnings coming up for a lot of these companies. And the last one I'm going to talk about is ChargePoint here, and we have a very nice falling wedge here with $19 as initial support, and now $17 here as the support. But you see here, this has been acting as a really strong zone of support. Now we're pushing up this upper trend line, so we're gonna have to see if we get some volume to push over, or are we just gonna consolidate, head back down to maybe the $17 range. But as you see here, the $17 range is going to be a really good place to buy. If it heads down back to this zone here, that is a buying opportunity for this company. All in all, there's a lot of good potential coming up for these EV companies and charging companies. We do have a lot of earnings coming up, so we have to keep an eye on those and see where the direction goes from there. But if you survive this long in the end of my video here, I know I rambled on a lot about technical analysis, but remember that it's all about risk to reward plays. We don't want to buy something that just keeps going up and up. I personally didn't play the Tesla move myself, but I still made money on other stocks, playing other tech stocks like Snap, or I was playing Lucid, stuff like that. So you don't have to chase the play every time. Just know to buy at the lulls and look at the patterns and trends, and that's how we win as technical analysis. So in the comments below, let me know if you're interested in EV companies, if there's a specific EV company you want me to talk about and do a deep dive on. I'll take a look into that. But leave a comment below, hit the like button, subscribe to my channel, and then we'll see you guys next time.